Former Bank of Canada Governor Stephen Poloz is predicting massive economic pain for Canadians and stagflation, which is going to be nasty. Let's discuss this. Welcome to another Fruitful report where I talk about anything business, economics, real estate, finance, no edits, no funny stuff, straight fucking facts. You already know. Let's get into it.
Prediction?
Yes, prediction.
Pain.
So as I've said many times on this channel, with all the live data we have, we know that we've been at a 0% GDP growth. We can just easily look at the Bank of Canada reports, and they themselves are reporting that since January 1st, 2023 to now, I'm filming this in November 2023, we've had a 0% GDP for all of those months. So not negative. We're not technically in a recession. But like I always say, if we look at the real data and we strip out the immigration benefits from bringing all the immigrants over who are buying homes, buying cars, buying groceries, buying jewelry, buying stuff, that's stimulating the economy. It's a good cause for GDP. It helps our economy. That is for sure. But if you strip that out, which is not really real boosting, we're at a negative GDP. Okay, so what does it mean when we have 2 quarters in a row of negative GDP? That's a technical definition that we're in a recession. Now, if we've been there since January 1st to now, okay, we're almost pushing 4 quarters of negative GDP, which I always say on this channel, I really believe these monetary reports, once we get into February, March of next year, because they're always 3 to 4 months behind, it's going to prove that we've been in a recession this entire year. And what's the playbook for Tiff Macklem at Bank of Canada when we're in a recession? And it's confirmed we're in a recession with their lagged data. Okay, cut rates. That's the gameplay. So for all you doomsday people out there who are hoping or so positive that the real estate market is going to crash,
it's going to be mayhem.
It ain't going to happen, dude. What do you think's going to happen the second those rates get cut? Okay, real estate is going boom, boom. We'll talk about that in a sec. So what's the main reasons why we're in this negative, no growth period for all of 2023? Stephen Poloz, who was a pretty great bank of governor when he was in, that was for sure. He's saying that fiscal deficits and spending need to be controlled, basically, which is not something these people do really, is knock the government, whether they're in office or even when they're out. It's kind of rare for them to do that. But what he's basically saying in a nice economist way is Justin Trudeau's got to stop spending. The Bank of Canada is doing what they got to do with monetary policy, okay? We're selling off bonds. We're not buying as much. We're raising interest rates, okay? It's tightening. It's financial tightening for the economy. But if we have the fiscal budget just going insane while the monetary budget is trying to rein in, it's not going to help, okay? It's just going to make it slower for inflation, cause more pain, leading to interest rates being higher for longer, truly, which we know that's going to be bullshit too, but it's causing it to be longer. It's causing unnecessary pain when the prime minister in charge is still just racking up the budget, spending shit everywhere, sending money to countries all around the world. We won't get into that, but maybe we should stop doing that just for a little bit. Now, it's long been talked about the 2% inflation target, which even Stephen Poloz was saying, yeah, we should shoot for the 2% inflation target. Reason why? That's a healthy range where the average citizen doesn't even realize inflation is happening. Now, you might be wondering, why do we even have to have inflation? Shouldn't it just be 0? Well, the economy needs to move. People's wages need to increase over time or else they'll get pissed off or bored with their job. Things have to progress. So if wages increase, that means food's going to increase, services are going to increase. Naturally, that's going to happen. But if we do it at a healthy rate of 2% a year, that's the target, you know, like he said, it's just a small nominal increase every year. Nobody's really going to notice it because they're probably going to get at least a 2% raise at work. Most people get anywhere from 2 to 5% raises at work every year, even without getting a new position or a new bonus or whatever. That's just natural wage increase. So 2% is good. However, many economists are saying it's too low. We should probably raise it to 2.5, 3%. Others are saying, no, it should actually be 1.5%. But this was instilled in the Bank of Canada in 1991. And while they're talking about increasing, which I wouldn't be surprised because we know getting to that 2% is going to be pretty hard when the fiscal budget is going insane, when you have the carbon tax and the increase on mortgage interest from the Bank of Canada, which for some reason they calculate in their CPI data, the inflation data. That's crazy to me. We already know from many videos I've posted here, if you strip out the carbon tax, and most importantly, if you strip out the extra cost put on homeowners because of the interest rates, okay, inflation is actually sitting at around 1.82% already. That's with the carbon tax still in, by the way. That's just the mortgage interest out. So we're already at target 2%. If you take out the carbon tax, we're somewhere around 1.2 to 1.5% CPI inflation. So that actually means we're too low. And yet the Bank of Canada is still saying higher for longer. We might have to raise. We don't know. We're data dependent. They're going to tip us into a very serious recession, which even Stephen Poloz is pointing out, hey guys, might want to slow down on that. Now, with all this said, we know where inflation is headed. So as private citizens, as real estate investors, as investors, which is what this channel is totally made for, okay, we know where the trend is going. It might take a little longer, might be a little bumpy on the way down. We'll have pops in the CPI go up a little bit, but long term, not even long term, 6 to 8 months from now, a year max, we know where inflation is going, which is going to be at the 2% target for sure. We know that already. All the live data point to that. The price of oil, the price of gasoline, which is what I always talk about. The price of rents are slowly coming down. The mortgage interest payments will come down when they start cutting rates, which is going to happen early 2024. They've already even admitted to that. So we know where inflation is going. So as investors, we have to capitalize on the trend. Because what do you honestly think is going to happen to real estate when they start cutting rates? Which they are. Stop being a doomsday person thinking they're not going to cut rates. They're going to hold rates right here until fucking 2025. Are you out of your mind? We're going to be in the darkest recession ever in history. And nobody as a governor wants to be in government while that happened on their watch, and they created it, okay? It's terrible for their career, terrible for the history books. They ain't gonna do it. Tiff Macklem's already said the fear of over-tightening is real, and they're already sensing that they might be at the point of over-tightening. Already, we're not even there yet. So the cuts are coming. Real estate's gonna be a gong show, but if you just buy quality real estate, which is what I always talk about, I don't care what's going on in the economy. I don't care about inflation. I don't care about a recession. I don't care about wars, pandemics. Everybody needs a home to live in. So if we're buying quality assets in good areas, which unfortunately I don't think is in Canada anymore. I've bought 150 properties, all in Canada. It was a great place to invest. I made a lot of money. It was a great place. But now prices are so high, interest rates are so high, and the rents aren't high enough to pay for that property. That's the point of investing. You buy a property, your payments are $2,000 a month on the house, your rent is $2,300, $300 profit. Cool. We do that for 5 years. We sell the property, it appreciates. Bing, bang, you get some money. That's real estate 101. However, you can't do that anymore. So that's why we're investing in the United States. That's why we're investing in Texas, in Florida. We're looking at Georgia and Tennessee. Prices are way, way lower. Taxes are lower. More incentives for investors like me to go down there. We're losing businesses and investors and talent and home supply. Most investors are going to the US, the good ones, the ones that produce the most homes, that build the most homes. Why wouldn't they? Taxes are lower for doing the exact same thing. We're making more money. The rents are more. The cash flow is more. I wish I knew about this personally like 5 years ago, but better late than never. So myself, all my partners, we're all leaving Canada. Less homes for Canada. Less supply. What does that mean? More demand. There's still a lot of people, and we keep bringing immigrants in. We're not building. We're not providing housing. What do you think prices are going to do? It's going to be great. It's going to be great if you're a real estate investor. It's not going to be great if you're an average Joe or an average Sally, which is why I post these videos. And if you're watching this channel, you need to step up. You need to invest. Stocks, crypto, gold, real estate, whatever your thing is. I like real estate and a little bit of Bitcoin, okay? That's what I like personally. And I do invest in some stocks as well. But I got a large portfolio. I've been doing this for a while. If you're just starting out, my recommendation, real estate, real estate, real estate. Quality asset, everybody needs it. It has thousands of years of proof of real estate values going up. It ain't going nowhere but up. Anyway, guys, that's a Fruitful report. I will see you in the next video.